Dear viewers, welcome to yet another episode of Expert Speaks. I'm picking up a very popular topic. I'm picking up a topic which is relevant to every NRI and to a lot of resident individuals as well. Everyone is looking to transfer money outside of India. Could be education expenses, could be health related expenses, to buy a property, to start a business, to invest outside of India. But people hit hurdles. There are legal hurdles. There are law requires them to do certain things. And in this episode, I'm going to talk to expert of the week, Chartered Accountant Sriram Rao, about how people can move money out of India in a legally correct way and what are the steps that you need to follow. Stay till the end of the video. Very fine points I'm going to discuss with Chartered Accountant Sriram Rao. This is NRI Money Clinic for you, and I am Dr. Chandrakant, your financial guide for a happy living.
NRI Money Clinic. No hype, just the right advice.
Dear viewers, to talk about this very important, sensitive topic, I have requested my eminent faculty, ever-willing Chartered Accountant, C.A. Sriram Rao. C.A. Sriram Rao has deciphered so many finer points of income tax for the benefit of our audience. He is here today, yet again, to talk about how money can be remitted outside of India. This video is all about for NRIs who want to remit money outside of India. We are also trying to pick up certain threads for the resident Indians, how they can remit money. But if the video becomes very large, probably I request C.A. Sriram Rao to come again on our channel to do one specific video for the benefit of resident Indians. For those people who haven't seen C.A. Sriram Rao till now, I'll give a brief introduction of Sriram Rao. He is a practicing chartered accountant, partner at Nitin J. Shetty & Co. He practiced direct taxes. He appears for litigations on income tax. He has helped countless of NRI audiences in solving their tax queries. Welcome yet again, Sriram, for this episode.
You're welcome.
My first question to you is, can NRIs only remit money into India, or do they have a right to take money outside India as well?
Any person who has funds in India which is earned from a source which are not prohibited under FEMA and also on which the applicable taxes in India has been paid, such funds will be eligible to be remitted from India. There is no issues. However, there are certain regulations which needs to be followed before remittance of funds. And certain of funds which are to be remitted, they are, require specific prior permission from RBI. And most of the funds which are required to be remitted are, does not require any prior permission from RBI or the central government. And it can be covered within an automatic route and funds can be remitted without the prior permission.
You talked about prior permission of RBI, and you also said in an automatic route which does not require anyone's permission, you can send this money out of India. Can you explain when the permissions are required and when the automatic route we opted for?
Yes, certainly. There are certain capital account transactions, that is to say, a transaction which is modifying the asset or a liability, and say remittance of funds which are sourced out of modification of asset or liability will be considered as capital account transaction. And generally, funds sourced out of capital account transaction will come under the prior permission category. And any revenue incomes, that is to say, dividend income received from their investment in India, or say interest income received, or say they are receiving rental incomes, which are, a current year income, we can say, saying that every year that income is being earned by that particular person from their investments in India. These investments are called as revenue account transactions as such, and which are free for remittance without much of a restrictions under FEMA. Under automatic route, there is no requirement for prior permission of RBI in this regard.
We have heard about this $1 million scheme, specifically for NRIs. It says that every NRI is entitled to repatriate money at the rate of $1 million per person per year. Can you throw some light on this? What are the salient features of it? Who can use it? What does it cover and what it does not cover?
Yes, absolutely. I can, throw some lights on that. This particular $1 million scheme is applicable for remittance by a person being a non-resident under Foreign Exchange Management Act, which is FEMA. it is an exception rule. That means to say, whatever may be the other rule say, this $1 million scheme is a specific rule which is allowing a person to remit funds even though certain those funds require prior permission of RBI before remittance. For example, if there is a capital account transaction on sale of an immovable property. So this is the consideration received therefrom, which is lying in the bank account, is a capital account transaction if that fund has to be remitted outside of India. At that time, it is mandatory for that particular person to take the permission of RBI. However, the fund, if it is less than $1 million for a financial year to be remitted, then there is no requirement for prior permission by that non-resident. He can avail the benefit of this scheme and whereby he can remit the funds under this scheme without requirement of prior permission under an automatic rule. However, this exception rule has got some further exceptions. Say for example, if there is an asset which is in India, which is held by that particular person in contravention of the provisions of FEMA. That means, say a non-resident had purchased an immovable property being an agricultural property. This is prohibited under FEMA for a non-resident to purchase some. He came to know that he has purchased, with a violation. That's why he sold it now. And the consideration is received in the bank account. That money will not be eligible to be remitted outside of India because that money was originated from a transaction which is prohibited under FEMA. So this is an exception to exception. Otherwise, all the capital account transactions generally will be allowed to be remitted unless they are specifically prohibited from remittance from India.
When we talk about $1 million scheme, is it only applicable to NRIs? When I say not non-resident individuals, I am referring to non-resident Indians. Does it apply only for them, or even a resident Indian can make use of this scheme?
The $1 million scheme is applicable only to non-resident or OCIs, overseas citizen of India, for remittance of funds from India under an automatic rule. And they have a higher limit of $1 million per financial year for remittance. However, whereas a resident has a similar rule, but it is called as liberalized remittance scheme. Under this, he can remit up to 0.25 millions only. $0.25 million, that is 2.5 lakh USD or financial year he can remit. That is the rule applicable for a resident. But non-resident, the additional threshold of $1 million per annum has been provided.
Mr. Sriram Rao, let's do a separate video for the benefit of our resident Indians. We had done a video earlier also which has become quite popular. Now the relevance of this video could be much higher. We were doing the statistics. Last year we saw about 13.5 lakh children have gone outside of India for higher education alone. Consider the amount of people who are traveling, people going abroad for medical treatments, people these days buying properties outside of India, like in Bali, in Dubai. So the need for remittance of money to outside of India is on the rise. So we will promise our audience that we do a separate video with all the caveats, all the rules and regulations that you need to follow when it comes to question of remitting money to outside of India in case of resident Indians. Now coming back to our subject. Now, we talked about $1 million for the NRIs. I'll ask you some of the ramifications of it or some of the complications that could be there in it. Let's say that I am an NRI. I am eligible to transfer $1 million outside of India. Now, my friend wants to start a hospital. Can I remit $1 million from India to a friend of mine who is outside of India under the scheme?
The answer is no. The said scheme is only for the purpose of remittance to self and not for the purpose of making payment to the others. That means you have an account outside of India, you from your Indian bank account, you transfer it to your own bank account outside of India. So that is eligible under the $1 million scheme. If you want to make a payment to somebody else, $1 million scheme will not come to your rescue. You have to either take prior permission if it is required. Otherwise, if it is a revenue account transaction, you can remit under normal other rules. The $1 million scheme will not apply under those circumstances. Here, one more caveat. If you want to invest outside of India, say you are a non-resident in India, you transfer from your own bank account to your bank account outside of India. From there, you can make investment. Right. But from India to directly there cannot be done under $1 million scheme.
So which means to say the AD bank will check to whom the money is going. So you are
True.
transferring to your own account. So that's permitted. But if you say the beneficiary is a third party, so they will object for it. So make sure you collect this money in your account and decide what you want to do with this money once it reaches your bank account. When it comes to question of $1 million scheme, you mentioned about one restriction. Assets are acquired in contravention of the FAMA law, then you can't remit this money outside of India. Are there any other restrictions other than these ones?
Normally, any funds, remittance of which are allowed or which are not specifically prohibited under FAMA can be remitted under $1 million. However, if any transaction per remittance which are specifically prohibited under FAMA, then such remittance cannot be remitted under this scheme. If the amount to be remitted over and above $1 million scheme, then prior permission of RBI is required. So this is how it is. So almost everything is covered, but with an exception.
So to just summarize, as long as it does not violate the FAMA law, the source of funds, that's permitted. As long as it is within the threshold of $1 million per person per year, it's permitted. Anything beyond that, either it is not permitted or you need a RBI permission to transfer money outside of India. One doubt in case of NRIs is, NRIs maintain hell of a lot of NRI FDs. They have FCNR deposits. Now, the law says it is freely repatriable outside of India. Now, when somebody moves money out of India from their NRE or FCNR account, has it to be computed under $1 million scheme or it is something different?
The answer to that is the $1 million scheme will not apply for remittance out of the NRE or FCNR fund, because even though they are the type of bank accounts maintained with an Indian bank, from the perspective of Foreign Exchange Management Act, that is FEMA, these accounts have the balances which are already outside of India. That means if any funds are there, it is already considered as outside of India. So the funds can be freely repatriable outside of India without any limit. Hence, they are not covered by the regulations of $1 million scheme for threshold of calculation of $1 million. So if any remittance out of NRE and FCNR funds, that will not be counted.
So if my understanding is correct, whatever an NRI transacts from his NRE FCNR account with respect to moving money outside of India has nothing to do with the $1 million scheme. You can do it, you can transfer money at your will whenever you want, whichever the way you want it, no questions asked over there.
Yes.
However, your funds which are there in India, if it has to be moved, that is where the $1 million scheme will apply. So you don't need to take into account any transactions you have made from your NRE account into this. Mr. Sriram Rao, some time back, we also have done a video on this. There was a sensational news that to remit money outside of India, you need to shell down 20% tax. And it becomes such a hot topic, debated topic, trending topic on Google, YouTube, all over the place. Now, when it comes to question of $1 million scheme, are NRIs required to shell down 20% tax before they remit money outside of India?
See, the money which is lying in the bank account, on that, whatever is the tax liability, if any, that needs to be discharged. That means to say I have sold a immovable property, I want the sale consideration. On that, if any tax liability is there, that needs to be paid. But once it comes to my bank account and taxes all that have already been paid, then for remittance purpose, there is no tax applicability. I think you are referring to TCS, which is applicable for remittance of funds under liberalized remittance scheme. The LRS scheme, liberalized remittance scheme, is applicable only when a resident remits funds from India to outside of India. And for $1 million scheme, there is no applicability of TCS. So, for the purpose of remittance of funds, there is no additional tax to be paid in terms of TCS or any other particular TDS or whatever it is.
When somebody wants to transfer money under $1 million scheme, can he just walk into a bank and say that I'm an NRA, I want to transfer money $1 million outside of India and do it? Or is there a documentation that needs to be done? Are there clearances which are required before the money leaves India?
Here, one need to make sure that for a financial year, when a person is remitting funds outside of India, he can only have one banker, that we normally call it as authorized dealer banker, AD banker, and from only one banker he can make the remittance from India to outside of India in one financial year. So he can do that in tranches also. So there is no restriction that in one go only the entire money has to go outside of India under $1 million. So he has to first make sure one of his banker where his funds are, that banker is termed as AD banker for the purpose of remittance. If he has funds in multiple bank accounts in India, he has to bring those monies into one bank account, and from there he can make the remittance outside of India. This is one of the requirements. Second requirement is the documentation. There are documentation requirement under the Foreign Exchange Management Act. So under RBI guidelines, they have prescribed certain forms to be filled up, wherein they have to mention the source for what is the purpose of remittance, provide certain other documentary evidences for remittance of funds. Those are actually very subjective, and there are forms which are similar to Form A2 for remittance of funds, and the declarations, certain declarations to be given by the non-resident, which the banker will help you to fill up those forms and make the submissions along with your check for remittance, etc. If you provide it to the banker, they will make the remittance out of India to their bank accounts outside of India. Now, the banker is supposed to do other due diligences also. For example, the source of fund, whether that has been taxed or not, whether the relevant tax on that has been paid or not. In this regard, they may ask for certain other documents. Say, if the proceeds are from sale of an immovable property, then they will ask for the immovable property sale, registered deed of that immovable property sale. They will ask for, say, Form 16A for the TDS being deducted on the sale of immovable property. Say, they may ask for the return of income, whether that has been filed by that particular person declaring this income, so on and so forth. So these are the certain other documents or information which the banker may ask for, which the person who is remitting funds from India to outside of India has to provide to the banker.
Which means there is a need of a chartered accountant to certify certain of these documents.
It is not necessary in each and every transaction that there is a requirement of a chartered accountant, but for certain due diligence procedures which the banker will have to take care, at that time he may require certain certification from a chartered accountant, for if there are no proper documentary evidences are available at the disposal of the banker.
Which means to say, here an NRI must have a PAN card before he uses the $1 billion scheme, I suppose. Is that correct?
100%. A person remitting funds from India to outside of India must have a PAN in India. Without the PAN, he cannot remit funds from India to outside of India at all.
So there is a huge responsibility here in these cases on the AD banks to ascertain that the thresholds are not violated, and the required regulatory requirements pertaining to the applicable taxes, if anything has to be paid, are paid here, and take a certificate from chartered accountant, or as the case may be, whatever that the procedures say, have to be ensured. So the control points here is only one AD bank is allowed. Any bank may track their PAN number to know has he used it multiple number of times at multiple number of places to keep a control on. So Shreenu, we have heard about this certificates called 15CA and 15CB. Is it something which is applicable to $1 million scheme?
I will explain this in a very lucid manner. This Form 15 CACB is a requirement under Income Tax Act. It is not a requirement under Foreign Exchange Management Act or say RBI Act. None of them prescribe these forms. When a person remits from India, that to his own bank account, to his bank account outside of India, then no banker can insist on Form 15 CA or CB. This is because of the fact that these are the forms which are a requirement under Income Tax Act and not under FEMA. Hence, RBI does not frame any directions in this regard, mandating such forms to be provided by the remitter. Secondly, Form 15 CACB is a requirement of Section 195 subsection 6 of the Income Tax Act, read with Rule 37BB of the Income Tax Rules. These provisions and the rule specifically say that these forms are required only when a person is making the remittance in respect of a payment which he needs to make to a non-resident. Meaning thereby, when a person is transferring his funds from his own pocket, one pocket, to the other pocket, say his Indian bank account to his foreign bank account, or say from his NRO bank account to his NRI bank account, the bankers are also aware of this fact. So under these facts and circumstances, there cannot be any Form 15 CACB required to be furnished by the remitter as such. Further, the RBI master directions on this issue of $1 million scheme. In the one of the para, it clearly says that it is the Form 15 CACBs are the requirement of Income Tax Act, and it requires that the banker must comply with the requirement of the tax laws as applicable. That means to say, the banker has to do the due diligence. While doing the due diligence, he may ask for certain information, documentary evidences, which if the person is able to furnish, then there is no requirement of Form 15 CACB. But if the person is not able to furnish, then also there is no requirement of Form 15 CACB, because that is not a requirement under income tax. But for the due diligence purpose, the banker may insist on certain other certifications required by that particular chartered accountant or in respect of a particular transaction which the source for the funds which is being remitted outside of India. So, in a nutshell, the banker may ask for certain certifications, but that certifications are not or cannot be provided in Form 15 CACB, because that is not the requirement under Income Tax Act when a person makes a remittance from his own bank account to his foreign bank account. This is as clear as that.
Mr. Sriram Rao, thank you very much for all these fine points. You have added a lot of points from the videos that we have done in the past, and we are guided by the comments that are received by our audience. My dear audience, please make note here. If you have certain doubts, if you want certain clarification, please do raise them in the comment section below. We may or may not be in a position to answer them immediately. However, we read your comments. Definitely we make note of. When more and more people ask more and more questions to us, we will collect them, ask to our faculties, and we'll try to do a video to solve these issues or to give you authentic information which is as per law. Thank you very much for your time, and I again request you, let's try and do one more video for the benefit of our resident Indians, how they can remit money outside of India. There are more questions for the resident Indians with respect to transfer of money to outside of India than probably for the NRIs. Let's do these videos once again very soon. Thank you again for your time, patience, and your ever-willingness to come on our channel for the benefit of our audience. Thank you very much.
You're welcome.
Dear viewers, hope the video that I've done today helped you to understand, if you were to be an NRI, how you can transfer money outside of India, what are the rules and regulations that govern it, what kind of certifications have to be done, what are the threshold, what you can do, what you cannot do. We have tried our best to answer all the finer points around this particular subject. If it gave you the clarity, do not forget to give me a thumbs up. By the way, your subscription matters for us. Many of you watch our channel. Forget to subscribe for the channel. We produce 2 videos every week. Every Tuesday, an expert comes on the channel and gives you information what you're looking for. Every Friday, I speak my mind out on your life, your money. Each video is value-filled. Do not miss any one of them. If you are not yet subscribed, hit the subscribe button right now and press the bell icon. Do not forget to share our videos with your near and dear ones, friends and relatives, and on your social media as well as on the WhatsApp groups on which you are connected with. Thank you very much for watching this episode on NRI Money Clinic. I shall be back with you with yet another useful topic, with yet another expert next Tuesday. Till then, stay safe. Jai Hind.
Press the bell icon for more details and subscribe our channel.